Hi, everybody, and welcome to the first episode of the Gameplan Academy technical trading course. Now, in this course, the techniques and skills that we are going to be learning are going to be applicable to all asset classes, across all asset classes. And basically, what we're going to be learning in lesson number one, this is the introductory lesson. We're going to be learning about market structure, how to identify market structure, how to identify when market structure is changing, identifying support and resistance, and as well as identifying the market trend. Now, when it comes to structure, the main thing is being able to look at a chart and identify highs and lows. So if you can look at the screen here, the first thing you would like to identify is where are the highs and where are the lows. So for instance, we can see here that we've got a low and we've got a higher low, right? With a high as well. And then we have a higher high, followed by a higher low. So what we can identify in this market structure is that the market is bullish. And when we mean bullish, we actually mean that prices are ascending. Market structure is all about trying to identify what is the trend in the market so we can identify what type of trade we're looking to take. So when a market is designed like this, in this specific situation that we're looking here is bullish, what we would be looking to do is to place buys, right? So it's always important to try and identify where are your highs, where are your lows. Some people like to identify from the close basis on the candlesticks, and others like to identify from the highs at the wick. But either way, we can both agree and understand that the market is in a rising market structure. And what we would be looking to do is to take buys in such a position. Now, the opposite end of that would be the market showing us a structure of lower lows and lower highs. So as identified here on the screen, currently we can see that the market is generating lower lows and lower highs. Now, in this instance, what we would need to pay close attention to is to see that the market is moving down. We're creating lower highs and we're creating lower lows. Also, the market is bearish. So what we would be looking to do in terms of trade setup is to only look for short positions, right? And how we do that is by looking to sell the market when it is at resistance and to buy the market when it is at support, right? So now, how do we identify support and resistance? Support is basically a level where prices are being held up, and we can identify this from a horizontal standpoint. So I'm just going to remove all the clutter so that we can have a better understanding and better view of what support and resistance actually looks like. So this area over here can be considered support. And the reason for that is each time the market comes to this line or near it, it bounces. So these are areas where you would be looking to buy, provided that the market has a bullish market structure. This area I'm going to identify now can be considered as resistance. Now, resistance is where you would be looking to sell the market, provided it is in a bearish structure. So in this case, we'd be looking at a different pattern, but this is how we identify support and resistance. Now, certain rules that we need to know about support and resistance is when support is broken and price trades on the other side of support, that support turns into a resistance. So just by looking at this chart and identifying different horizontal levels of price, we can see how the market acted as support in this area here. And when we came back and broke through this level, the market was then turned back to resistance. After the market broke here, the market didn't necessarily come back to this point, but you can see how the market then decided to trade lower. So we're always looking to buy the market at support and to sell the market at resistance levels. Now that we understand how to identify market structure and how to identify support and resistance, we can use different tools to help us with certain trades that we're looking to take. So if you look at this current market structure over here, we can draw a number and a series of supports and resistances in order to be able to help us identify what is the current market structure that we're in. So I'm going to come to more recent time so that we've got a better understanding exactly of what it is that we're looking at. Currently, the market's in a downtrend. And even though the market's been in a downtrend, we can actually see that there have been levels of support and levels of resistance. What we are looking to do is to buy at support and sell at resistance. But because the market is showing us bearish structure, we will only look to trade selling. So in this case, for example, after the market broke through this support level, because we know and understand that the market is in a bearish channel, this is where we would be looking to take sell positions with anticipation that the market will create a new lower low. So usually where we would like to take profits just based off the simple technique of market structure and support and resistance is for the market to create a new lower low. In a buy situation, we would need the market to give us some sort of support level where we could look to buy the market. So, for instance, the market created a support level there and it created a resistance level here. After the market broke this high, created a new low and a new high, when we came down to this support and came back for a second time, because we know that we're in a bull market, we would be looking to go long. And long means we're looking to purchase with stops or take profit levels above previous highs. Now, this way of looking at the market does actually work across all time frames, but what would be suggested is that you actually look at the market from higher time frames and trade down. Always use higher time frames to identify and to give you better market structure and bias for a direction that you're looking to trade. So, thank you, ladies and gentlemen. That will be lesson number 1.